we had this 90-day pause, and I'm going to be very, very tough on China and Japan and these other countries, and they're going to have to come to the table and do a new deal. And obviously that's very negative for risk markets. So these deals expire in late July and mid-August, and so I think we could have a period of probably a correction, maybe 20, 30%, something healthy, something to get people shook a bit. And then once we enter into Q3, Q4, the Republican Party needs to prepare for the 2026 election and demonstrate to the American public that they have a good economy, the stock market's doing well, people have jobs. That means money printing.
Arthur Hayes cuts through the noise of mainstream market analysis. While everyone obsesses over Fed Chair Jerome Powell's every word on interest rates, Hayes points to a far more pivotal figure, Scott Besson, Trump's Treasury Secretary. Why? Because Besson isn't just another bureaucrat, he's a mastermind behind America's debt machine, tasked with convincing investors to bankroll trillions in government deficits. By buying Treasury bonds, this isn't just about monetary policy, it's about who really controls the financial levers, and according to Hayes, the real power lies not with the Fed's rate decisions, but with the Treasury's ability to keep the debt game alive.
And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
The person to listen to is not Jerome Powell, it's Treasury Secretary Scott Besson, and he's the chief salesman for all the shitty bonds that he's got to sell on behalf of his boss, Donald Trump. And so he's going to go out there and sell the bonds. And if you're not buying the bonds, then he's going to find a way to print the money. And he's been very clear about the ways in which that his department can do that. He talked to us about Treasury buybacks right after Liberation Day when the markets were in meltdown mode. He's gone on recently talking about the ending of the conservatorship for Fannie and Freddie in the United States, and some financial analysts believe that could inject over $5 trillion of liquidity into the markets if those organizations were allowed to lever up their balance sheets like they were pre-2008. And he's also talked at length about the exemption of the supplemental leverage ratio, so allowing the U.S. banks to buy Treasury securities with infinite leverage. And in his words, he says sometime this summer he expects that rule to be, that exemption to happen. So I think all these things are happening in the background. And at least when you think about the Fed, obviously they've held interest rates constant. People are looking for quantitative easing. But if you really look through what their portfolio has been doing, the Fed has actually been buying Treasury bonds of 10 years or longer in maturity. So they're actually doing stealth QE for the part of the bond market that nobody wants to own for obvious reasons. You don't want to own 10-year, 20-year, 30-year bonds because of inflation and whatnot. You're okay to own a 1-year Treasury bill because you get, 4.5%, and it's better than putting your money in the bank. So that's what Besson has trouble selling, these long-term bonds. And himself and the Fed are going to do whatever is necessary to keep that rate lower. And if you're not going to buy them with your own money, he'll print the money to buy them instead. And that's ultimately what helps bring Bitcoin to 250,000 and on to 1 million by, I think, at least sometime before 2028. So obviously Bitcoin dominance is rising. It's like 64%, something like that right now. I think a lot of people are looking around their altcoin portfolio and, they own a lot of dog shit and it hasn't gone up in price. And then they question whether altcoin season is going to happen. But I think there has been an altcoin season because you didn't own it, right? Did you own Hyperliquid? You could have bought it at $3 when it listed. Now it's at 33 or whatever it is. There's been other projects that have done very, very well in this cycle. It's just that if you have a large overhang of venture capital that has to sell once you've listed, your token hasn't done so well. And so I think that cash flow generating projects with real customers who spend real money, and that money makes it great from the protocol to us as the token holders, those very few projects that hit all three of those metrics are going to do very, very well in whatever we call this altcoin season. But I still think that Bitcoin dominance is going to continue to increase until ETH decides that it's going to move again, because literally that's the biggest thing that's going to move that needle lower in terms of Bitcoin dominance. Yeah, so I think we bottomed obviously April 9th, the day when the pivot happened in terms of the 90-day tariff pause. And I know the market's up something like 30 or 40% since that date. I think that we're going to continue rallying into the mid, June, maybe late June period. And then the market's going to start focusing on what happens after the 90-day tariff pause. Does Trump sort of go back to maximalist rhetoric to prove his point that he's serious about changing the dynamics of trade and economic flows for the benefit in his mind to America, which would mean that the rhetoric might shift to, we had this 90-day pause and I'm going to be very, very tough on China and Japan and these other countries, and they're going to have to come to the table and do a new deal. And obviously that's very negative for risk markets. So these deals expire in late July and mid-August. And so I think we could have a period of probably a correction, maybe 20, 30%, something healthy, something to get people shook a bit. And then once we enter into Q3, Q4, the Republican Party needs to prepare for the 2026 election and demonstrate to the American public that they have a good economy, the stock market is doing well, people have jobs. That means money printing. They're all kind of the same thing. It's money printing. In Japan's perspective, the BOJ, Bank of Japan, has been saying that they want to normalize rates, raise rates. They're probably the loosest central bank out there versus their inflation target. And the market's not liking that. If you look at the, 20-year plus bond maturities and stuff that the BOJ doesn't own, domestic Japanese life insurers are selling these bonds because they're losing money. And so at the end of the day, is the BOJ going to continue to tighten monetary policy? We don't know. We're going to find out in June. They're supposed to start quantitative tightening in June. I don't think they're going to end up doing it. And that'll be a big sea change for the markets because then you'll fund everything that you want in Japanese yen again because it's the cheapest currency that's freely tradable, for like a hedge fund or risk on investor to do so. So I think we could get some more monetary, push from Japan. And then China is waiting in the wings. They are obviously stimulating, but they have a massive hole in their property market that's absorbing all this capital that they're printing.
Hayes is betting big on Bitcoin's next bull run, predicting a potential run to $200, zero in the near future. His confidence stems from a key shift. Institutional investors are no longer just dipping their toes in, they're diving in with advanced strategies. His own fund reflects this evolution, offering both high-octane leveraged plays and conservative Bitcoin-linked products. This dual approach pulls into crucial crowds, risk-tolerant traders chasing explosive gains, and cautious institutions seeking steady exposure. The result? More capital, deeper liquidity, and a market primed for a major breakout. The takeaway: Bitcoin's next rally won't just be driven by retail hype, it'll be fueled by Wall Street's growing sophistication in playing the game. And if Hayes is right, the $200,000 target may be closer than it seems.
No, we'll keep buying Bitcoin. We expect the price of Bitcoin will keep going up. We think it will get exponentially harder to buy Bitcoin, but we will work exponentially more efficiently to buy Bitcoin. It used to be we thought raising 200 million was challenge, and then raising 2 billion was a challenge. And then in the fourth quarter, we announced we were going to raise 21 billion. And so we're getting better. Bitcoin is 10 times higher, 10 times more valuable than when we started on this journey. And the entire ecosystem is growing. But I think our strategy is very simple. It's issue credit instruments like preferred stocks that offer a yield in dollars, or issue some portion of Bitcoin upside with some downside protection. That will create leverage for our common equity. And then people will buy the equity or the derivatives of the equity or the options of the equity because they want higher vol, higher leverage Bitcoin. And people will buy the preferred stocks because they want lower volatility, lower risk, lower leverage, guaranteed returns. And we will straddle that, and there's no reason that can't just continue to scale as the ecosystem scales. I think it's an incredible cabinet, a lot of Bitcoin believers in the cabinet, and there's a lot of good ideas circulating in the industry. The Bitcoin Policy Institute created a bunch of them. Even the cabinet members have mentioned quite a number of them. It's above my pay grade to decide what the U.S. government will do and when they will do it, but I do think there is an extraordinary opportunity for the United States. If I was advising the United States, I would say, all the capital in the world is going to flow into cyberspace, into the Bitcoin network. It's in the best interest of the United States to own as much of it as they can before everybody else in the world realizes what's happening. I think Bitcoin is a manifestation of very healthy competition. So as the U.S. expresses support in Bitcoin, we have the Pakistanis announcing a strategic Bitcoin reserve. That inspires the Emiratis. It inspires the Middle Easterners to also begin to accumulate in Bitcoin. It accelerates Bitcoin adoption in Brazil. It accelerates adoption in Mexico. It accelerates the moves of corporations. Eric Adams standing up on stage and announcing his intent to issue bit bonds for New York City. That's going to inspire Miami and inspire LA and inspire San Francisco. So it's healthy competition. there's more than enough to go around. The network is very anti-fragile, and there's a balance of power here that's created because the more actors that come into the ecosystem, the more diverse, the more distributed the protocol is, the more incorruptible it becomes, the more robust it becomes. And so that means the more trustworthy it becomes to larger economic actors who otherwise would be afraid to put all of their economic weight on the network. The best future for the crypto economy, for the crypto industry, and what the U.S. should do if they want to create a $100 trillion digital assets industry is, in law, they should define 4 new asset classes. The digital commodity, that's what Bitcoin is, an asset without an issuer. There's only going to be one king commodity. There might be half a dozen over the next decade. The digital currency, that would be a stable coin backed 1-for-1 with U.S. currency equivalents in a regulated bank, like Circle. Then the digital security, that would be a tokenized stock or bond circulating 24/7, 365 at the speed of light everywhere in the world, like digital Apple stock or tokenized, SPY. And then the final would be a digital token. A digital token would be a tokenized fan club, a tokenized ticket, a tokenized membership of some sort. And there's 40 million small businesses in this country. And if you want to issue a token, you should be able to issue a token in 4 hours. And there ought to be an issuer, and you ought to say what the token does. It ought to have some digital utility or real world utility, but it should stop short of offering security, financial utility. It shouldn't give you liquidation preferences to a going concern. It shouldn't give you guaranteed cash flows for 30 years like a bond. It ought to be Joe Rogan token or Katy Perry token. And if Katy Perry wants to offer a token that offers her VIP fans the ability to book tickets 48 hours in advance to her concert tour, they buy it. It would have utility. It wouldn't be a security. And if she didn't go on concert for the rest of her life, the token would crash. And if her concerts were great, the token would fly. And when you look at Trump coin, it's a meme coin. That means a token that has no utility. How many people can sell a token with no utility? Only a handful of people will do it, but some people can sell a meme coin.
The U.S. has a golden opportunity to become the global hub for Bitcoin and crypto if it acts fast. Hayes argues that America's regulated financial infrastructure could attract massive capital inflows, solidifying its dominance in the digital asset era. But hesitation could be costly. Nations like Pakistan, the UAE, and Brazil aren't waiting. They're already building sovereign Bitcoin reserves, positioning themselves as crypto-forward economies. The race is on, and the stakes are high. If the U.S. drags its feet, it risks losing its financial supremacy to countries moving decisively into the future of money. Want more insights? Hit that next video.